If you spent even 5 minutes listening to YouTube finance channels, you probably have heard the same advice that they give to everybody for investing. Invest in a standard growth fund index like SPY, reinvest your dividends, and in 40 years, check on it. And sure, that's textbook advice. That's sound advice. But that's for 20-year-olds. What if you're a late investor like me, where I started in my mid-40s, or maybe your 50s, and you don't have the luxury of time? And your primary goal is to build a reliable stream of supplemental income for retirement in 10 to 15 years. Does that standard growth advice still make sense for you?
Wait, Chow! If the textbooks say growth always wins, are late investors just totally out of luck? Do we just give up and buy lottery tickets?
Absolutely not, Henry. But we can't be following the advice for 20-year-olds. When you start later, you need real, tangible cash flow. Today, we are going to be running a real-world experiment. We are putting a standard growth ETF fund, SPY, against monthly paying NEOS covered call ETF, SPYI. We're tracking a real scenario where we're going to put in $100 for investment, $100 every month, reinvest the dividends, and we're going to see between the two which one actually builds a faster retirement supplement. And to show you that this is in real time, I'm going to be doing a screen recording where I actually put in the numbers so that you can see that this is completely accurate. All right, let's go ahead and check that out. Okay, so right now I'm in totalrealreturns.com and I'm looking specifically at SPY and SPYI. And you can see right here in November 2022, there was a bear market, and you can see that the red line, which represents SPY, and the blue line, which represents SPYI, they both fell. But SPYI did not fall as much. In fact, if you go here, you can see in 2022, SPY was negative 18.18% and SPY negative 2.45%. And then as you continue looking at the total returns here, you can see as we go through February 2024, February 2025, and all the way up to May 2026, yes, SPY overall total returns is doing much better. Now we're going to go over to the portfolio visualizer. And what I want to show you right here is I'm going to show you in real time comparing SPYI to SPYI. All right, so I did put here start year 2022, and that's because SPYI started in late 2022, and I put in year 2026. And then the initial amount, $100. We're going to put contribute fixed amount because we're going to be putting in $100 every month, monthly. And we're going to say reinvest dividends, yes. And we're going to show display income, yes. And now we're going to go over here to portfolio assets. We're going to put in SPY and then SPYI because those are our two that we're going to be comparing. Then over here, we're going to put in the sticker, the tick, and here we're going to put in the ticker, and it's 100. And here we're going to put SPYI, and then you can see it'll pop up the NEOS S&P 500, and then we're going to put 100%. And now we're going to analyze portfolios. Scrolling down. And then now we look here at performance summary. And you can see SPY, SPYI. Our initial balance here of $100. And then you can see the end balance. SPY, $6,029. SPYI, $5,644. So you can see the growth textbooks will point directly to this table and say, see, SPY won by $385. That shows you. But remember, this is on paper. Paper balance doesn't pay our grocery bills, does not help us with our money that we need right now. So, I mean, if you're like me and you're starting late and your goal is to not have to just wait, you don't have the time, well, you need money, cash flow now. You're waiting only about 10 to 15 years. So when we see the SPY, yeah, they're making more with the shares, but you would have to sell out on all those shares to get that money. And then if you sell out those shares, you don't have any more money. So now let's look at what's more important to us as late investors for dividend income. Okay, so we're back here. Now I want you to look here is portfolio income. This is the dividend income that those two ETFs are bringing in. So right here, 2023, SPYI $13, SPYI $84. Go to 2024, SPY $32, SPYI $267. 2025, look at this. This is like a skyscraper right here. SPY $49, SPYI $468. And of course, 2026, we're just midway through here, but we're looking at $14 for SPY and SPYI $208.
Holy skyscrapers, Shell! So even though SPY has a slightly higher total balance, SPYI is handing us an actual income stream we can use right now?
Exactly, Henry. But what's another amazing thing with SPYI is because you are getting the monthly dividends that you're reinvesting, and if you are adding monthly money to it each month, when the market is volatile and SPY goes down, well then the shares are cheaper. So when you put in that money, you're actually buying more shares, which is going to increase your dividends, and it's going to continue to grow that dividend snowball. So as a late investor looking for supplemental income, which one do you choose? Well, what's really nice is you don't have to choose. If you're like me, you're doing a hybrid approach. You have the high yield cover call ETFs, the NEOS, and you have your regular investing that's a little bit more stable, like I have VNQ. I also have growth stocks like Excelis and T-Mobile and ELF. It's like you can have a mixture and keep yourself diversified, but also growing that dividend. So if you do go with some NEOS cover call ETFs like SPYI or QQI, then you are getting the best of both worlds. A positive psychological effect where you just see that money growing and it keeps you motivated, and also a financial win because your dividend is growing faster. You're building your safety net and your growth. When you're a late investor like me, you can't follow the same advice that's given to 20-year-olds. You don't have the luxury of time. So you have to play your own playbook. And that means to grow that dividend income if that's what you're planning on using for either supplemental or if you're hoping to have enough for your actual retirement. So I hope that I showed you that with NEOS covered call ETFs that they will help you reach your financial goals a lot faster than just sticking with the regular advice that's given to everybody else. And if you liked what you saw here, don't miss this Friday's video where I share with you my Robinhood dividend portfolio update, where I go over my dividends each month to show you that snowball effect. And if you kind of want to get started, definitely check out this Robinhood dividend portfolio update from last month. That way you'll have a little heads up on how much has grown from last month to this upcoming month. So what about you? Are you more like, no, I'm going to stick with just the dividend income, or nope, I'm just sticking with the growth income, or are you doing something like I'm doing, hybrid? Let me know down in the comments. And Henry and I will see you this Friday.
Don't miss the update! Bye, everyone!
If you watch to the very end, thank you so much. We really do appreciate it. And just so you know, I am not financial advice. This is just for educational purposes only.